In this anchor report, we've downgraded India's growth forecast. We highlight 4 reasons why we think the recovery will remain subpar, and we draw on important macro implications. So 4 reasons why we think it's going to be a subpar recovery. Number 1, India is facing a triple balance sheet problem involving banks, corporates, and now shadow banks, which has tightened credit conditions. 2, because of this, policy transmission is actually partially clogged and it's countering the policy easing that the Reserve Bank of India has delivered. Number 3, investments remain quite weak. That's hurting potential growth and is also impinging on job creation. And finally, the global demand is weak and that's also an additional headwind for India. So what are the important macro implications from here? The first thing we'd highlight is that the growth outlook both this year as well as in 2020 is likely to be below trend and is likely to surprise consensus on the downside. We think investors need to keep a close eye on credit, fiscal and financial sector risks in this environment. Second, inflation may shoot up in the near term above the 4% target of the Reserve Bank, but we don't think inflation is an issue. So monetary policy will remain in an easing bias going forward as well. The one thing though we think investors need to keep a close eye on are fiscal risks, both for FY20 and FY21, where a fiscal slip is clearly inevitable. And despite the big focus on counter-cyclical policies to support growth, we do think that the government will keep a focus on structural reforms to improve the investment climate and to attract more capital inflows into India. So the bottom line from us is that India's growth outlook going forward will continue to face an uphill climb.